Hey traders, Joe Wright here from MaximumLocks.com, and this video is all about short-term trading for big profits. That's right, making those big profits from short-term trading. Okay, so last week I sent out a survey to all of the subscribers of my website, and one of the questions I asked was, what type of trading are you more interested in, short-term or long-term trading? And at the moment, I'm still waiting for a few responses, but at the moment, by far and away, most people are interested in short-term trading. Now, I'm going to run through two short-term trades I took last week. Now, for those of you who subscribe to the videos on the website, you'll notice this chart from last week, although it didn't look like this, obviously. So I had this supply marked up on the daily, and in fact, let me zoom out, and you'll see that there's a bit of a level there on the weekly. So you've got a drop, not the tidiest base, but you've got a pause in price before a big drop away. So that interested me, and so did this this view of the daily as well. Okay. Daily supply, big move away. Green candles only on the way back, indicating not much to stop price on the way back down. Profit potential is what I call that. Okay, now I'll just mark on where we were this time last week. So say Sunday last week. That is where price closed a couple of Fridays ago. So what I was saying was, look, we've got this momentum candle here, showing us that price is likely to go down. This candle tests that momentum candle, closes lower, and then we have another momentum candle. Now, these are big clues for me. I'll show you what I did next. Then drop down to the 15-minute chart. And if I put the days on, Control Y on MT4, this price action here, right here, that is the Momo candle. And this is the next day. So this would have been Monday. Was it Monday? I think so, yes. This would have been Monday. Okay. What I saw, you can see that price rallied up within this momentum candle here. If I scroll across, what I saw was this. I saw this demand level, put that on, and that demand level was engulfed. Price tried to get higher, and it couldn't, and we have two red 15-minute candles closing right there. At this point, I thought that looks good enough for me. I'm taking a short, stop behind here, only 30 pips, and I actually left for the slopes. I was skiing in France last week, and so just before I was getting ready, I opened the laptop. We had Wi-Fi in the chalet, so that was all good. And I saw that, and I thought, right, I'm going to enter there, stop behind, and looking at the, let's zoom back out to the daily, take those days off, I thought to myself, look, not much to stop price going down, so I'm just going to hold. I was going to be out for a couple of hours, so I thought I should be fine. And so I entered, I went, did some skiing for most of the morning, some of the afternoon, came back. When I came back, price was down here. Let me zoom out a bit so you can see a bit better. Okay, so what I did, I marked up these two areas here. Let's put that all in red. We've got a bit of supply there, and we've got this here. So what I did, I moved my stock down to this level here, and not too long after, well, a few hours later, price then took me out, which is fine because I made over 120 pips on that. So yeah, about 120 pips or so, which is nice. Now, had I moved my stock to here, then what I could have done after entering here, moved my stop in, then the next 15-minute supply would have been down here, would have made 180, almost 190 pips there. So one of the methods that I've talked about in the members area is trading my stop. So if I enter on a 15-minute, I will trade my stop behind 15-minute supply. If I'm taking a short, I enter a long, I'll trade my stop behind 15-minute demand. So this was a short-term trade. Now, often for me, there's only a few differences between my short-term trades and my long-term trades. I can see the same thing, which would get me into a long and a short-term trade, and the difference is often just the stop size and duration. For example, I took the same trade on my long-term account, took the same trade here on my long-term account, and I'm still in that trade. So on my short-term account, I made 120 pips, and on my long-term account, I'm actually still in the trade, and I'm up over 300 pips. So yeah, that's just one example. Let's have a look. Where are we? Let me zoom back out. H1. Yeah, so we can see that then price rallied up quite a lot and came back down. So my long-term account is still in profit. That's all good. But this is about short-term trading. That's just one example of trading the short term. Now, what's important as far as I'm concerned is that short-term trading doesn't necessarily mean trading every day. I don't have trades like that every day, but I'd rather wait for those quality setups where I can often make 120 odd pips in one move rather than trying to scrape, 10, 20 pips a day or whatever. So that's just one of the ways I like to do it. Now I'm going to show you another setup that I took last week as well, also while skiing. Good week last week, nice skiing and nice trades. Okay, so this is GJ, pound yen, and this is something that we've been looking at in the members area quite a lot actually. So we've got this demand level up here, price engulfed that, and price came down to this point here, which is just this support area. Don't really trade support resistance, but hey, we still have to acknowledge it. Price acknowledged it, so that is a support area. Okay, next thing we saw was price rallied up here to this previous demand. So we have a SR flip or a SD flip. Demand clearly turning into supply around here, and price was making his way back down. I had this area marked up. Now if we drop down to the H1, I'll show you what I then saw. So there was opportunity to actually trade down through here, but the trade that I took last week I'm going to run through now. Right, so we saw this Momo candle here. Oh, this is what I saw. Got that Momo once again, dropped down to, let's have a look, dropped down to 15 minutes. Okay, so if I put the days on, this price action here, this is that Momo candle. Just put this on so you can see. This is the Momo candle's price action on a 50-minute, and this is the next day. Okay, so what I saw was this. I saw 15-minute supply. So price rallied up a bit and then came back down with 50-minute supply. Let's just zoom up to the daily again quickly. So there's that Momo, price rallied up a bit, and then we had that 15-minute supply right there. And I saw this, and it was around this area here. I probably entered on this candle, entered there, stopped behind, slightly bigger stop, not a problem, and then I entered short. Now, for some reason, it happened twice whilst I was skiing. I was literally just about to go out and head out skiing for the day. Now, what happened next was this, and I saw price falling. I ended up waiting for a few of my friends who were also skiing that day, and I saw price drop down to daily demand. And so I decided to get out. Because price was moving that quick, often when price drops heavily, it also can rebound heavily as well. So I wasn't comfortable leaving that trade on because, otherwise I might have lost a lot of the gains. So in no time at all, I was at 100, 150 odd pips. So I thought, you know what, it's time to get out. So it was around this candle here, I believe. Let me just zoom out to the daily and show you why I exit. Take that off there a minute. If I zoom across, price dropped down to this daily demand level here. Let's put that on quickly. This one, yeah, okay, it's red, but it's demand. No big deal. Right, let's zoom back into the 15-minute. Zoom in. So I entered around here. Price came, touched this area, and started to wick away. I was about to go out skiing, so I thought, you know what, I'm going to exit the trade. So entered around there, stopped behind. Exit, I think it was almost 200 pips on this one as well. Obviously price then came down, Had I been at the screen, let's move these out of the way now. I would have done what I normally do, which is move the stop into 15-minute supply, which would have been that one. Put my stop in behind there. So instead of making under 200 bucks, I'd have made just over 200. So yeah, 270 was on offer. You know, if it made it right down to the weekly demand, which it came to eventually, then you know you could have made more. It all depends on how you want to manage your trade. Trade management is very important. Entries, you can have that down. Stops, you can have that down, but you need to know how to exit with profit. So yeah, so that was another great trade from last week. Okay, so big pips, short-term trading. Just by waiting for the great setups to come along, you can be in and out sometimes in a matter of minutes, like I was on this one. Now it's a good thing that I did exit, because when I came back in from skiing for the day, price was around here, so I would have lost a lot of those gains. Now you might say, why am I trading when I'm on holiday? Well, because I can, to be honest. I had a laptop, I had internet connection, and I was quite comfortable. I thought, why not? So last week was a good week for me. Holiday skiing and making money in the markets. Couldn't be better. So this is just two examples again of how you could take short-term trades and make big money. Yes, it doesn't always happen like that, but it can do. Now guys, I hope you found this useful. I will be sharing lots more information on short-term trading and the other things I mentioned in the surveys. So make sure you stay tuned. If you're not subscribed to the videos, then by all means do sign up so that you don't miss this information. Until next time, happy trading guys.